How to study the accounting standards. Okay, that's an interesting one. Now, okay, so let me quickly start with some of them and then we go. So, financial reporting, how do you pass financial reporting? Number one, you need to understand the structure of the exam and the scope of the syllabus, right? That's the first thing we need to talk about and know about in that regard. So what is the structure of our exam? Question number one is on consolidated financial statements. Question number two, accounting standards. Question number three, single entity financial statements. Question number four, ratio analysis. Question number five, theory and some ethical issues in the exam hall. But most importantly, corporate reporting, financial reporting, your ability to pass the exam is dependent on your ability to understand the accounting standards. So to the question that Kinsley is asking, how do I study the accounting standards? I think I've said this over and over again, but this is it. You must understand that the accounting standards are intertwined. The accounting standards are connected with each other. In other words, the accounting standards are not just on their own that you can cherry pick. They are connected to each other. For instance, if we take IAS 16, property, plant, and equipment, it's divided into two. That is initial measurement and recognition, and then subsequent measurement. Stay with me. On the initial measurement of property, plant, and equipment, that is assets used for the day-to-day running of the organization, there are a number of accounting standards that you must know, which helps us in the initial measurement of the asset. Because IAS 16 states that the initial cost of an asset shall be the purchases cost or the construction cost plus all other directly attributable costs incurred in bringing the asset to its present use. Okay, keyword there is all other directly attributable costs incurred in bringing the asset to its present use. And so the question we then have to ask ourselves is, what are some of these other directly attributable costs? One, borrowing cost, IAS 23. So when an entity borrows money to construct a qualifying asset, then the borrowing cost or the interest expenses on the loan must be included in the initial cost of the asset based on the capitalization principle, taking into consideration any investment income earned during the capitalization period. Number two, dismantling cost. If the asset is installed and the entity would have to incur some cost in the past to decommission or dismantle or restore the place that the asset was at the end of its economic useful life, then it has to also be included in the initial cost of the asset. And that is IAS 37, provisions, contingent liabilities, and contingent assets. And so we have to discount that amount payable in the future into present terms and include that present value figure in the initial cost of the asset, right? That's it. Number three, if the entity is constructing an asset or building an asset and the entity happens to pay some employees who are working on the building, working on the structure, then the wages and salary paid to these employees must be included in the initial cost of the asset in accordance with IAS 19, employee benefits. Number four, as part of the construction, the entity is going to be buying some inventories, some materials. And so what should be the cost of the material to be included in the initial cost of the asset, especially if it is the entity's own raw materials that they are using for the building? We go to IAS 2. Inventory shall be carried out lower of cost than net realizable value. So we compare the cost and the net realizable value. The lower of the two will be the cost of the material that will be included in the initial cost of the item that we are constructing. 5. If it happens that the entity purchased the asset from a foreign currency and the transaction is denominated in a foreign currency, then it means that we have to translate the foreign currency or the transaction denominated in a foreign currency into the functional currency of the entity. The process of doing that is enshrined in IAS 21, effects of changes in exchange rate. So you see, I hope you are seeing the picture that I'm painting. That's why I said my opening statement was the accounting standards are intertwined. And so if you tell me, yeah, I have learned IAS 16, okay, do you know how IAS 37 connects to initial measurement? Do you know how IAS 23 connects? Do you know how IAS 2 is connecting? Do you know how IAS 21 is connecting? Do you know how IAS 19 is connecting? And then do you know how IAS 20, government grants? Because when we qualify for government grants, or the entity receives a government grant for the asset, there are two ways we can account for government grant: the deferred income approach, which is the default approach, or the net off approach, where the government grant received or receivable will be deducted in arriving at the initial cost of the asset. And so you realize that at the initial measurement, you are seeing sort of 6 accounting standards coming in. So to your question, how do I study the accounting standards? You must understand first that the accounting standards are not on their own. They are connected with each other. So when I'm doing IAS 16, all these standards are coming in under initial measurement. Then I go to subsequent measurement of the asset. Now, on subsequent measurement, in accordance with IAS 16, the entity can decide to carry the asset at the cost model or the revaluation model. Irrespective of the method they are carrying the asset at, we have to test for impairment at least once a year, because IAS 16 states that an asset cannot be carried above its recoverable amount, which is in accordance with IAS 36 as well. So on the subsequent measurement, IAS 36 is coming to town, impairment of assets. And we say that an asset has suffered an impairment when the recoverable amount is less than the carrying amount. So IAS 36 is coming to town. Number 2, entities would have to account for the tax consequences of transactions. And so on subsequent measurement of property, plant, and equipment, we would have to calculate the deferred tax implication of probably revaluation of assets, and that could result into deferred tax assets, deferred tax liability, because of a taxable temporary difference or deductible temporary difference. And that is IAS 12 on subsequent measurement coming to town on the asset. Number 3, on subsequent measurement of assets, an entity may say that, oh, this asset, we don't want to use it again. We want to rent it out as under an operating lease, or a portion of this asset, we don't want to use it for our office any longer. We are moving to a new office. So this one, we are going to rent it out under an operating lease. What are they doing? They are moving for owner-occupied assets and non-owner occupied asset, and that is IAS 40, investment property, coming to town. Are you seeing the picture? So all these are under subsequent measurement. Another one, the entity might say, hey, where we are at, we are trying to reorganize, we are trying to restructure. For that reason, we want to get rid of some of the assets that we have. We want to sell some of the assets and raise some money. Oh, so management has decided to sell the asset. The asset has been decommissioned and available for sale. The entity has located or is looking for a buyer, and they expect the sale to end or to be closed at the end of the accounting period. That is IFRS 5, non-current asset held for sale and discontinued operation. And so that is the beauty of the accounting standards. I know some of you, these things that I'm saying, they are sounding like, plenty. But you see, if you look at the way the accounting standards are intertwined, it's just beautiful. So that's how you study the accounting standards. Like knowing them in their rights, but most importantly, connecting them so that if I'm doing IFRS 5, I should know that subsequent measurement of IAS 16 implication is there. So it makes me to have the principle and let it stay with me. All right. If I'm doing IAS 12 income tax, I should know that it has connection with other accounting standards. IFRS 2 share-based payment. This is for corporate reporting students. It has some relationship with other accounting standards. So I need to know the principles and apply it when it is called upon in the other accounting standard. That's the beauty of the accounting standards. So you realize that talking about just IAS 16, initial measurement and subsequent measurement is bringing up about 11 or 12 accounting standards, adding up to the IAS 16, making 13. That's it. That is how you study the accounting standard. And it's beautiful. I know you will say it's not beautiful, but I don't know. It's beautiful. And this is one thing you must understand. Whether I like it or not, at least 2 of the non-current asset accounting standards will be in the exam hall. Like you have a dedicated question on them. And these are the standards that I mentioned to you earlier under the initial measurement and subsequent measurement. The government's grants, IAS 16, 23, IAS 36, IAS 38. Whether I like it or not, at least 2 of them will be in the exam hall waiting for you. Now, for those of you in financial reporting, whether I like it or not, IAS 16, you have to know everything there. And IAS 12, you have to know everything there. Whether I like it or not, you need it. And so if you follow it carefully, IAS 16 alone has connection with 11 or 12 other accounting standards. And that's the beauty of the accounting standards. So how do you study? Yes, study the accounting standards and understand the principles in their own right. But know that the accounting standards are intertwined. So you cannot just say, I have finished with this accounting standard. No, you cannot say that. You need to know how to apply or use the principle from that accounting standard in another question that requires another accounting standard. Because for some time, or there are times when in answering the final account question, financial reporting students, you would have to apply like 6, 7 accounting standards. The examiner can give you a footnote, and in that footnote, you have to apply maybe 3 or 4 accounting standards because there is IAS 16 in there. There is an impairment situation in there, IAS 36, impairment of assets, and there could be some other things, tax implication, deferred tax implication there, IAS 12. So in just a single footnote, you got to call on 3 or 4 accounting standards. So how do you study it? Know the principles in their own right. Number 2, understand that the standards are interconnected and know how each of the standards connect with another. Then you need to expose yourself to questions, right? Expose yourself to questions. The more questions you solve, when I say expose yourself to questions, I don't expect you to go and buy ICAG past questions or go download the ICA past questions. Yeah, you can do that, but most importantly, look at the ICA question kit. Look at questions from various other sources. Expose yourself to questions. And number 4, solve the questions under time. Because time is going to be your enemy in the exam hall. And the only way you can get over it is to solve the questions under time. Consciously. Okay? I cannot overemphasize this. Consciously, under time. So you set your stop clock on, and it's each one mark question is actually going to be 1.8 minutes. So 1 mark is for 1.8 minutes. So if the question you're solving is 5 marks, you just multiply 5 by 1.8, and then you see the time. Then you set the time up, and then you go. That is the idea about that. So you have to solve the questions under time. So understand the principles of each accounting standard. So you have to be open to study. That's the first thing. Number 2, understand that they are interconnected. Very important in that particular case. Then certainly make sure that you work on yourself and expose yourself to questions, and you should be good. You should be good. So if you ask me how the heck do you study the accounting standards, Kingsley, and to all the AFR squad, this is what I can say.